session. Ghana's central bank today kept the country's key lending rate at 30% on the back of the country's moderate second quarter GDP growth of 3.2% that was reported last week. In the meantime, protests continue for the fourth day on Monday in the cocoa and gold-rich West African economy. Thousands of Ghanaians are on the streets carrying placards complaining about the worsening socio-economic conditions. Let's take excerpts now from the Bank of Ghana's post-MPC press briefing held earlier today by Ernest Edison.
In the first 8 months of the year, the trade account registered a surplus of $2 billion compared with $1.6 billion recorded in the same period of last year. This was largely due to import compression and a decline in exports. Total export earnings declined by 8.9% year-on-year to $10.8 billion, driven mainly by a significant drop in crude oil and cocoa products exports. In the review period, crude oil exports decreased by $1.5 billion due to an 18.8% fall in production volumes, as well as a 23.6% decline in prices. Exports of cocoa beans and products remained broadly unchanged at $1.6 billion compared with the same period in 2022, as the higher production volume of the beans balanced out the lower volumes of cocoa products. Gold exports increased to $4.7 billion on account of an 8.5% rise in the volumes exported and 1.9% increase in prices. Earnings from other exports, including non-traditional exports, decreased marginally by 1.6% to $2.1 billion. Total imports contracted by 14.7% to $8.8 billion from $10.3 billion a year earlier. This was attributed to a 13.1% contraction in non-oil imports to $6.1 billion, as well as a dip in oil and gas imports of 18.2% to $2.7 billion. On the external position, the balance of payments for the first 6 months of the year recorded some improvements. The current account recorded a surplus of $859.1 million from a deficit of $1.1 billion last year. The sharp improvement in the current account reflected a significant reduction in external debt service payments on the Eurobonds, bilateral, and some commercial loans, resulting in over $2 billion of savings in the year to September 2023 due to the external debt service standstill. For the same period in 2022, the current account recorded a deficit of $2.5 billion. At the end of August 2023, gross international reserves, excluding encumbered assets and petroleum funds, stood at $2.1 billion, equivalent to 1 month of import cover, compared with $1.5 billion, 0.6 months of import cover recorded at the end of December 2022. Gross reserves, broadly defined to include encumbered assets and petroleum funds at the end of August 2023, stood at $5.1 billion. The Ghana cedi has remained stable from the beginning of the year to date, except in January, when it depreciated sharply on account of the uncertainties at the end of 2022 associated with the launch of the DDEP. The Ghana cedi depreciated by 20.6% in January 2023 and has remained generally stable since then, with a cumulative depreciation of 2.5% between February and September 18th, 2023. The relative stability in the foreign exchange market reflected improved foreign exchange supply, including IMF flows, Bank of Ghana's domestic gold purchasing program, and the purchases of repatriated export proceeds from mining companies and oil and gas producers, which amounted to about $1.9 billion as at the end of August 2023. Furthermore, the bank's foreign exchange forward auctions for bulk oil distribution companies have helped remove the disorderly conduct in the market and contributed to exchange rate stability. Summary and outlook. In sum, the committee noted the moderation in global economic activity arising from high inflation, tighter financing conditions, weak demand weighing down on manufacturing output, as well as the moderation in China's recovery after the sharp rebound in the first quarter. The slowdown in global growth momentum is, however, concentrated in advanced economies, with the euro area being a key downside risk. But emerging market and developing economies are expected to post some strong growth at 4% in 2023. Global inflation is expected to remain above central bank targets for an extended period due to strong labor markets and pass-through of energy price shocks. The disinflation process is projected to take longer than expected, requiring moderately tighter policies, while growing uncertainty about the global growth outlook could trigger repricing of risky assets, sharp tightening of financing conditions, and further strengthening of the US dollar. These could transmit to the domestic economy through the trade and financial channels. On the domestic front, the committee observed the overall improving macroeconomic conditions, with relatively strong economic growth and a drop in inflation in August. These developments provide evidence that the policy mix under the 3-year IMF extended credit facility is beginning to yield results. Economic activity is rebounding strongly. The exchange rate is stabilizing. Inflation is declining, and the level of foreign exchange reserves has improved. Sustained improvement in these indicators should result in the restoration of real incomes and purchasing power. The strong growth outturn observed in the first half of 2023 is expected to continue in the third quarter, as indicated by the July 2023 update of the bank CIEA. Also, Ghana's PMI lent support to the growth outlook, reflecting improving business conditions. The results from the confidence survey so far also indicate continued improvement in business and consumer sentiments, influenced by the relative stability in the Ghana cedi, and more recently, the resumption of the disinflation process. The pickup in confidence is expected to continue for the rest of the year, in line with improving macroeconomic conditions. On the implementation of fiscal policy, while policies remain consistent with the IMF-supported program thus far, challenges associated with revenue mobilization persist and will require additional efforts to safeguard the revenue-led fiscal adjustment program. The country's external sector position has continued to improve significantly in the first 8 months of the year, supported by a current account surplus, reflecting higher gold export receipts, import compression, and lower outflows from the services and income accounts. The lower balance of payments deficit, the domestic gold purchase program, as well as inflows from the mining sector, and the liquidation of short-term external liabilities contributed to rebuilding the country's reserve buffers. In the last quarter of the year, reserve accumulation would be further bolstered by the expected inflows from the cocoa syndication loan, the second tranche of the IMF ECF facility, and other multilateral inflows. On inflation dynamics, the continued maintenance of a tight monetary policy stance and relative exchange rate stability have contributed significantly to the disinflation process observed in the year thus far. Headline inflation has declined by a cumulative 14% since the peak of 54.1% recorded in December 2022. Non-food inflation has also declined sharply by close to 20%, broadly reflecting the effectiveness of monetary policy. All core inflation measures monitored by the central bank are trending downwards, indicating continued easing of underlying inflation pressures. In addition, 1 year ahead survey-based inflation expectations seem well anchored. While the disinflation process has resumed, which results in a gradual return towards the target band over the medium term, bearing unanticipated shocks, rising international crude oil prices, and adjustments to utility tariffs remain a risk to the outlook, which would have to be managed through monetary policy vigilance. Given these considerations, the committee decided to maintain the policy rate at 30%. The committee further indicated that while the expectation is for continued disinflation, it stands ready to respond appropriately should inflation deviate from these broad expectations.